Welcome to the show. Today is June 9th, 2022, and I'll be doing an update on Executive Order 13959, GameStop, CEI, Camber Energy, and Metamaterials Torchlight Preferred Shares, MMTLP. It's pretty hot around here right now, so we have the air conditioner running, so you'll probably be hearing a little bit more background noise than normal. So please excuse that. In either case, let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So let's start. So, what happened to June 3rd in Executive Order 13959? Let's have a look at that. Well, on that day, the market was fairly red on June 3rd. S&P 500 was pretty much red. There was the one bright green spots. It was energy, and oil and gas was up, but everything else was pretty much red. If we looked at the crypto market that day, it was really red. It was Bitcoin dropped below $30,000, and crypto was red. So what happened to GameStop? How does this affect? How was it affected by EO13959? Let's see. This is the this is the chart of GameStop for the up until June 7th, 2022, right? And it goes back till 2020, as you can see. So if we zoom in on that, on the last few days, we can see that on June 3rd, which is the end of the day, that EO13959 took place. Not too much happened. Stock was up a little bit. By Monday, which was end of day, June 6th, the stock came back down a little bit more. Not too much was happening there. But by Tuesday, we saw that the price got up to 145. So that was T plus 2, right? So if we look, it was a 45% increase from a few days ago when the price was around $100 a share or less to over $145 a share. So that's a pretty big change, 45%. But in general, if you go back out to June 9th, just 2 days later, you see it came back down to where it was at June 3rd or before. So not too much is happening there, I think. But in general, this is the stock of GameStop over the last, year or so. Today is June 9th, of course. We see the stock ended the day at almost $129 a share. But in general, GameStop has a habit of going sideways, doing nothing as it did in 2020. It might go up 50%, it might drop down, by almost the same amount, who knows. But in general, you can call that sideways movement. And then it has what's, this feature called a significant rise as the stock price starts going up. And after the significant rise, it had what I like to call it just went vertical, right? It just went off the deep end. Right now, I'm thinking GameStop is going sideways. So what does that mean? That means it could do a significant rise coming up soon. And after that, if it goes vertical again, if it repeats this pattern of sideways to significant rise to vertical, that's a huge possibility right then and there. So, as of my broadcast on June 2nd, this was what I felt about GameStop. And basically, my opinion has not changed at all. Basically, my thought is that we're waiting for a split via dividend. We're waiting for the announcement. We don't have the announcement yet. And I think that if the stock rises to a significant level, let's say around closer to $200 per share or so, maybe 180 or so, then we're getting close to a possible announcement of a split dividend, right? And I think that's a key thing we're waiting for, right? So we're still waiting for that. They have made that they have authorized the shares, so we're all set. We're all good to go. And the summary I had as of June 2nd, I'm saying there's no change to that, right? Situation's pretty good right now. They released earnings, their revenue is up, they got $1 billion in cash in the bank, they're in great financial shape, no real debt, the burn rate's manageable, they've got an NFT marketplace, we're just waiting for the split via dividend, right? So that's the situation. If we look at the news, in GameStop, what does the news say? Well, Let's just scroll down and we can see that in terms of news, it says that this is the first article I just happened to pick. Is GameStop using debt in a risky way? Oh, wow. Could GameStop be doing something risky? I won't read this entire news article to you. Basically, the short answer is no. They're not using debt in a risky way. They have about $1 billion cash in the bank, $42 million in low-interest debt. It's actually a good thing that they have some low-interest debt there. If you read the article, it said, we looked at their liabilities to see if we could bash the company. Basically, that's what they're saying. I'm just, putting my words in there. Sure enough, their liabilities outweigh their cash. The article doesn't want to really talk about their assets because, that would show the assets outweigh the liabilities by a significant amount. But they can make some statements in the article that says that, they have a humongous market cap of $10.5 billion. I'm not quite sure why that's humongous. Anyway, they're saying it's a $10.5 billion is a humongous market cap. But in either case, implying that it could be lower, I guess. In either case, I'm saying that this article has nothing to say. But at the end of the article, they do conclude by saying, buy the subscription. So if you want some more non-information, go for it. So this is a little bit more relevant information. A couple of days ago, we see that we see an article that says short sellers raise their bets against GameStop and AMC to its highest level in a year, as Wall Street sees more pain ahead. More pain ahead. Wow. I guess they must be guessing GameStop's price is going to drop and plummet. So that means people are shorting, right? Well, we always knew people were shorting. What's the cost to short GameStop? Well, we see this. Yellow Wolf happened to post on Twitter that this is what he saw for Ortex data. This is what it costs to short GameStop. It currently costs about, the short interest is currently huge. It's about 29, almost 30%, 29%, 28.79%. And that means that there's about 18 million shares short. Granted, there's only 75 million shares, so 18 million is a lot. It's a lot of shares, okay? And what is it going to cost him? It's going to cost him 200% annual fee interest rate, apparently, to short GameStop. That means they don't have a lot of time to short GameStop. If they're shorting GameStop, they better be hoping the GameStop is going to dump quickly so they can get their cash, because 200%, that's an awful lot to be paying to short anything. So, here's my overall summary again. In general, I think that Executive Order 13959 had no discernible effect on GameStop's stock price as of June 9th, 2022. We gave it a few days. I don't think anything really happened there. Might something happen in the future? Who knows? But I don't see EO13959 being the reason for it right now. I think GameStop is still in play. There's a huge short position, greater than 25%. Well, yeah. Greater than 25%. The short borrow fees, it's indicative that it's greater than 200%. That means they can't hold on. That means if they held on to the stock if they held on to their short position for a year, they'd be paying twice as much as any profit they expect to make. If it went to zero, they might make 100% profit. But they're paying borrow fees of 200%. They got a limited time there. Okay? TikTok. I think the shorts are trapped, and I think they're paying the borrow fees because they have no choice. If they did close out their short position, the price would go up significantly, and they're screwed. Why else would you be paying borrow fees of 200%? Give me a break. Sorry. And not only that, the split via dividend may result in a massive upward price movement, which we call MOAS, right? The mother of all short squeezes. So that's where we're currently at. I saw this interesting post on Reddit, r Superstock. It's kind of humorous. Just like to say that whichever one of you met my sister for a Tinder date in DC last night and decided to preach GME on the first date, you're exactly the kind of guy I'd want for her to bring back home. Next time, take her to Wendy's. Save some money. Buy more shares. There you go. Humorous. This is the market for June 9th, 2022, right? The market's mostly red. S&P 500 is just about all red, even Even energy is red. There's just a few speckles of green here. So what does that say for Camber Energy? It's the next on the list, right? Well, on June 2nd, my summary was that, hey, they need, we're expecting the Form 10Q to be happening soon, mergers happening soon, And what happened? Sure enough, the Form 10Q got filed on June 7th. So we're no longer waiting for the Viking Form 10Q. That means that the merger is coming soon. Right, here's a June 7th announcement for the Form 10Q for Viking Energy. Took place. And there we go. Done. We're now waiting for the S4 to be filed. And the S4 is a document indicating about what the merger is going to be. It's a merger filing. You might be getting back some money from a deal that they set up last year with this biodiesel company, because that deal apparently is not going through. So we'll see. We'll see what happens. They might be getting back 20% if the rest cannot pay back, the money that was provided. We'll see. Anyway, this is Camber Energy. Stock ended the day today at 56 cents a share, basically. But over the course of a year or so, it went as high as $5 previously. So it's down 90% or so. We see the pattern that they trade is that they typically drop in price significantly, followed by a massive run up in price, dropping in price significantly, massive run up in price. We're at this drop in price significantly. Are we going to have a massive run up in price soon? Hard to say. James Doris talked about this biodiesel plant because the Form 10Q drop. People are upset about some people were upset about the renewable diesel deal not going ahead. But basically he dodged a bullet there, I guess, because the company's pre-revenue. The finance is challenging at this point without massive dilution to Camber Energy and Viking, so they didn't want to do that, so the deal is not going ahead. So, good thing that's not going ahead. As we see, Camber Energy, stock symbol CEI, announced and released a whole bunch of amendments to their 10Qs and their 10Ks that were filed. Basically everything they filed recently, they've just amended with additional new information. So we're waiting for that S4 to come out now. Along the way, Viking Energy happened to file this 8K. And this 8K is really interesting. This 8K talks about buying about 4,743 producing and non-producing oil and gas wells. Okay? They're buying an interest in non-operated minority working interest in 4,743 producing and non-producing gas wells, right? Currently, they're making something like 686,000 cubic feet of natural gas per day. That's 686 million cubic feet of natural gas a day, and 18,000 barrels of oil per day. Okay, the working interest that they're looking at is about 2.24%. And they only own so they're only talking about buying about 2.24% of this interest. The people who are operating the wells are the big name players, right? You got Chevron, BP, ConocoPhillips, Occidental Petroleum, Continental. These are huge players, right, in the oil and gas field. I won't go over all of them, of course. They're huge. So these are wells that are making money. How much money? Well, 18,000 barrels a day. Let's say oil is $100 a barrel. It's more than that. It's like 120 right now, but let's just say it's $100 a barrel. They get an interest of 2.24%. That means that they'll be making about $40,000 a day just from those oil wells. From the natural gas, that's going for $8 right now. They could make $122,000 per day from natural gas. $123,000. That means per day they could be clearing $163,000 if these things are operating Monday through Friday, 5 days a week. That means that there's about 250 days in a year. So we're talking about something in the range of $40 million per year. $40.8 million per year that they could be getting in revenue from this. Pretty good deal. Pretty good deal. But let's talk about oil, right? Because we know Camber is really into oil, right? Well, this is what's happening in the oil market. This is some recent news, right? It's hard to get leases right now because, you got to worry about, you have to worry about the global climate and the effect of oil on global climate. So we're not getting leases right now. Climate change and all that stuff. We got liquid natural gas output falling so Qatar is not producing LNG right now. Their output has fallen, right? And the market's desperate for liquid natural gas, LNG. Price of natural gas is up like crazy, right? And even the Chevron CEO says he doesn't expect any new refineries in the U.S. ever based upon the current climate, right? Takes billions of dollars to make a refinery, and based upon the way things are going, are you going to make any more refineries? Probably not. So what does that mean for oil? Well, oil is at nearly $120 a barrel today, June 9th, 2022. Okay. The blue line is an average price of oil going back 1 year. And that means it's going to cross $90 per barrel soon. Okay. The blue line is an average, so that means that's the average cost of oil going back a year. Let's look at Nat Gas. Nat Gas is almost $9 right now. The blue line is an average going back a year, and it's easily gonna cross $5.50, head towards $6, and go on. Right, that's where Nat Gas is. What does that say for the MMTLP dividend? For those who are not aware. This is the story of MMTLP. There was a company called Torchlight Energy. They discovered about 3.2 billion barrels of oil reserves in Texas. It's not proved. It's in the process of being developed, of course. It's called the Oro Grande project. And Torchlight Energy and Metamaterials merged in order for Metamaterials to get listed on a U.S. exchange. In the meantime, Torchlight Energy shareholders, they were getting this thing called a Series A preferred shares, which gave them the right to the proceeds from the sale of oil and gas assets. They were planning to sell off the oil and gas assets. Well, back then, oil was around negative $47 a barrel. You might remember that. That was a while back during the pandemic. Donald Trump was president. We had tons of oil. Our reserves were overflowing, and oil was negative $47 a barrel. Well, now oil is $120 a barrel. Okay, those Series A preferred shares of MMT, those Series A preferred shares, which were not worth anything when oil is negative, and $120 a barrel, they're worth something. They're worth a lot, right? Anyway, those Series A preferred shares got renamed and became tradable on the OTC exchange, and they got the symbol MMTLP. Now, there were a bunch of shorts that had a short position in Torchlight, and they resulted in a short position in MMTLP because they never closed their short position. So if those short positions still exist, that's a huge liability on their books. It could be that those shorts are the reason that the Series A preferred shares became tradable on the OTC exchange, because somebody spent the time and money and effort, and they knew what they were doing to make those shares tradable. Because I think that those shorts wanted to close out their positions and buy back that liability. Anyway, so what are those shares worth? Well, we made a chart a while back. I'll provide a link to how this chart came up into existence. This is an estimated dividend. This is an estimated value of the dividend in terms of dollars per share in terms of MMTLP shares. Okay. I made this chart a few videos ago. I'll provide a link to go over it, but I'm not going to go over this chart because we have a limited amount of time. So, the way this works is we're currently, the last time I made this video was around 531. Last time I talked about MMTLP. And at that time, well, the average price of oil was around $83, almost $84 a barrel, going back a year with the 1 year average. At that time, the cost of oil itself was around $113 a barrel. Well, since then, the price has moved up. It's now in the range of $85 a barrel, looking back a year. And in terms of the current price today, it's almost $120 a barrel. as of June 9th. What does that mean? That means that they could be heading towards $90 a barrel very soon. If they don't get the deal done, you can probably expect they'll be using the $90 per barrel average price. We could be expecting anywhere around $56 a share in dividends. Again, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. I'm not saying do anything. This chart also, by the way, it does not include the value of natural gas. There's a ton of natural gas in there on these in the Oro Grande Basin. This chart assigns a $0 value for all that natural gas. That will push the price of the dividend up significantly, possibly. Anyway, as of May 31, I said that the plan for MMTLP was to spin out the oil co-shares, do some limited production, convert some of those reserve estimates to be proved. That will increase the price of the Oro Grande project significantly. They might drill some more wells along the way, you know. The plan is to sell the Torchlight oil and gas assets for quote-unquote maximum value, right? And pay out those dividends to the MMTLP shareholders. Well, has anything changed since then? Well, we have no update from Metamaterials about any of this stuff. So therefore, nothing has changed. But in the meantime, we see that the price of oil went up. We know that it's closer to $120 a barrel right now. Oil producers in the US of A are having a hard time actually meeting demand. It's hard to get natural gas. It's hard to get some oil and gas. It's hard to lease any land that might have oil and gas on it, like in Alaska. So you can't really lease it from the federal government. The only place to go to get oil, if you want oil and gas land, is the Texas Permian Basin, because that's private land. It does not require a lease from the federal government. And the oil producers want to take advantage of the current high prices right now. They want to sell oil at these high prices. So the question is, would potential buyers do their own investigations? Would they make an offer before the assets become proved and the prices go up significantly? They could. They could. But I said all of this on May 31st, 2022, and we have no new additional information coming out from Metamaterials. But are we thinking they're doing nothing along the way? They're probably making progress. Who knows what they're doing? I don't, for sure. But I'm sure they're not twiddling their thumbs. And that's basically it. That's my update. I won't be making any more updates on Executive Order 13959. I think that ship has passed. And again, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. With that, goodbye. Good night.